Yeah, so good morning, everybody. I hope you are all well and kicking. We have, today we want to talk a little about market structure. So the first thing I want us to look at is this, that before you trade, you must know the trend. Where is the trend going to? So we have the bearish or the downtrend, and then where you have, so price is at what? Resistance level, I'll explain. And then the sideways trend, that is where you wait, is now the market is going up and down, doesn't know whether to go up or down. So that is where you wait. You wait for breakout. Now, here is when the price is going up. So in short, these are the three different ways you can find the moment you open your chart. You have to ask yourself these three questions. Where is the trend? Is it bearish, going down? Is it sideways, meaning it's ranging in one line? And then, is it going up? And I'm sure everybody is good to go with that. Now, when we are done, we also have to look at how is the market moving. So I have a short video, a few, how you call it, pictures to show where you want to look at market structure and how to read it so that you be sure that whenever you see it, you will not panic, but quickly know that, I know you. I know where you are moving to. Then you also join. All right. So are we all clear on the trends? Please, are we all clear on the trend?
Yes, madam.
Okay. I know those who are gurus, this one will be boring anyway, but our beginners also need it. Okay. Then we come to, please, can you all see my screen?
Yes.
With the, okay, all right. So looking at the trading support and resistance. Here, I'm only, somebody is going to talk about support and resistance, but I just want us to look at these basics. Now, I talk about bearish movement of the candles, the candlesticks. So when you look at these candles, it goes up to a point and it stops. Then it breaks down to what? A support level. We call it support. Then it goes up, changes the level. It breaks out the level of the first one and goes up. So between the first level, which is high, if it moves up higher than the first one, we call it what? Higher high. And then we have what? Higher low. So you see that here also is low, but here it becomes higher low. So, and then it goes up. When it goes up again, breaking the first structure and then creating another resistance over here, meaning the structure is broken again. So we call it break of structure. All right. So this tells us that the market is going up. So it is becoming what? Bullish. Are we getting it? Now, when it goes up, it breaks up the structure. It comes down to what? Another support over here. But when it's going up again, it didn't get to break this structure here. It's now, it couldn't go up. So it means there is something going on, meaning the momentum that is gathering and going up and up, the momentum is going down. So quickly, it must alert you that the market may be going down for a sell. So you have to be careful, watch it. Now, you see that it's going down again, but it didn't reach this support that we're getting all along. Then it moves up again, break a structure, goes up. This is where you have to watch out. Now, the last candle over here, which is the bullish or the highest candle, the moment it gets here, it drops. Now, when it drops over here, you see that it breaks that structure over here that we have all this support up to this place. When it breaks it, then you know that there is going to be what? A sell, because it has broken the structure and now there's what? Change of character. What do we mean by change of character? It means it's no longer going up, it's no longer an uptrend as we saw it going higher, high, but now it quickly dropped. So this tells us that there is a change of behavior to what? A selling mode. But you don't sell from here. You have to wait to see whether it will break this support that was going up. Then the moment it breaks it, you start here, you think that now there's going to be a sell, there's change of character. Now, what do I do? You have to also watch it again, that the market will surely come all the way down, touch the level down here, which was the last low over here, the lowest. So you're going to check it. And it will by all means go up again to where it changed the character and quickly start going down again. Now, this is what confused with the rookies. The moment it start going down, we don't check whether it has come to where, whether it broke the last low of the uptrend. Then we jump in. Now, the moment you jump in, it goes up quickly. Then you start losing. Then you close your account or you close your trade. This time, you have to be patient. Make sure it gets to this level, and then it will drop. So this is how the uptrend goes, and then the downtrend will also follow the same scenario. Now, you see down over here also. How will you know that the trend will be going up? Let's come here. The trend also, here you see that at the support level, you see a candle that drops like this. We call it hammer. I think this hammer. There are different names for these dojis. Now, so the moment it starts, you now start thinking, very soon there is a breakout, or there's change of character here. It's no longer going down, it's going up, right? So you start preparing yourself to buy. Okay, so this is somehow the uptrend and then the downtrend. Any question at this level? Any question? Can you all hear me, please?
Yes, there are no questions in the chat box, so you can go ahead.
Okay. All right.
So if you have questions, please put in the chat box.
All right. So now we're going to watch a short video that explains. Now, all this we are learning is what we call smart money concept, which the big gurus or the big markets, the banks and co use in trading. Now, because we don't understand or know it, we are always found wanting. So I want to go up a bit and take my video. Hope I can see the video now. Let me bring it down. This sharing is not going up. Okay, let's see what I can do. Okay, I've seen it. All right.
We can't hear the video, the volume.
Oh, sorry. Okay, let me do this.
You need to click on share computer sound.
Okay. Is it down or up? I can see.
When you click on share,
Okay.
You see
Okay.
where you see share computer sound.
Share.
No, under more. My own is under more. You are
Okay.
using your laptop, right?
Yes, I've seen it.
Okay.
Okay, thank you.
Concept.
Can
Make sure you watch
now?
the entire video without
Yes,
wasting any minutes. Let's go dive in.
Okay.
So first thing is we're gonna have to identify the direction of the market using the higher time frame, like the 4 hours or the daily. Let's say we look for a bullish market or an uptrend. So here we see the price creating higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. Okay, so here market price is breaking structures to the upside. We're gonna have to mark our break of structures. We're gonna have to mark our break of structures. Okay, BOS stands for break of structure. So mark all your break of structures until your latest break of structure, which is right here. All right, on the lower time frame, every pullback that you see here is going to look like it's creating a low high low low until it reverses back to the upside and continue with a higher time frame trend. Then what you do is you wait for the market, you go to the lower time frame and you wait for the market to basically create a low high low low. Once you see the market coming back, you mark your demand zone somewhere around the higher low and the higher high. So basically the market is trading between this low to this high. So this is your trading range. And on the lower time frame, you have your low highs, lower lows, pretending like the market is going down, but it's just trying to align with the higher time frame trend. So now what you do is you wait for the change of character, retest, and then buy to target this structure here. So what you do is, once you identify the market coming down on the lower time frame and it hits your demand zone, okay, it hits your demand zone, you wait for a change of character back to this structure here, your demand zone, and then you target your previous highs there. Okay? And now we're going to try to identify a downtrend.
Please, do you understand the uptrend and how to trade with this trend when it's going up? First, you use the higher time frame, which could be what? 1 hour or 30 minutes. Then you can see clearly the formation of the trend. Now, when it gets to the top over here and there is what? Change of character going down, you change it to maybe 5 minutes or 1 minute and allow it to go do the zigzag or the up and down. Watch it. And if it comes all the way to the low of the last support level where it comes to, then this is where you take your trade. When there is what? It goes down all the way and quickly it starts going up here, then you take your trade. You don't take your trade anywhere here because it's going up here or going up here because it will come down. Wait for it to come all the way to the lowest of your last uptrend, which we call it what? The support. When it gets here and you see that there is what? A bullish candle or a buy candle that is closing, or sometimes you see that the red candle or the selling candle or the bearish candle, there is one, the last one before the green one starts, that is going to be, it could be, I don't know the colors people use. The moment there's change of character over here going up, you target the former highest level, and this is where you put your take profit. Then you take your stop loss below this, because if you bring it here, the market can go all the way up and come back again and hit the support over here. So you bring your stop loss a little below it so that when it comes back, it doesn't hit your stop loss. I think that's what Yamayurin has been doing, so that you see that you teach us that your SL stop loss will come below the previous low of the higher, the bullish candle. So this is when you are trading or having an uptrend trade. I hope I'm clear. French people will say c'est clair. Okay.
Yes.
Oui,
Or
c'est
a
clair.
market. Let's say here the market is making lower highs, lower lows on the higher time frame, like the 4 hours or the daily. Market is breaking.
Okay, so 4 hours or daily candle, please, not 1 hour. So 4-hour candle. So meaning when you get your trading view, you change your time, not minutes. You take it to what? 4-hour candle or daily candle. They are up on the trading view. You see the time. Okay, so that's higher time frame.
Structures, you mark your structures again, break of a structure, mark your break of structure here, another break of structure here, still going down, another break of structure right here. So here you have the price going down and breaking the previous lows, creating low highs, lower lows. Now you will mark your trading range. So the price is trading from this low high to this lower low, and then you got to go to the low time frame, look for the market, create a high high, high low, pretend like it's going up. Okay, once you see the market going back up, to retrace and align with the higher time frame trend, you mark your supply zone. You find your supply zone on a downtrend market and a demand zone on an uptrend market. Around demand zone, you find it around the the higher low and the supply zone around the lower high most of the time. So now that you mark your supply zone here on the downtrend market, and this is your lower time frame telling you, the market is going back to reverse, back to the supply zone, then you stay patient and wait for the price to give you a change of character. Okay? Your change of character, CH. Once you have your change of character, you're gonna target your previous lows, which is here. Okay. Also, I just want to add this. If you want to save your breakover structures or on your trading view template, just double click it, write BOS, and then go here, save, BOS, and then save. Okay. So that next time you don't have to rewrite it again. So now that we identified how uptrend and downtrend looks like and how to find supply and demand on
so we can see the low trend also where it started going down, break the structure, come down again, break the structure, and goes up again, breaks the structure. All right. Now, but when you observe that, the next one that is the high or that is resistant. Your resistance is just where the traders goes and then hit and goes down again. Now, the last one that was up here, or the resistance level, you see that it breaks, it didn't go up again, but it crossed where it's supposed to, the breakout structure is. Now it goes down. So here you go to a lower time frame like 15 minutes or 5 minutes or 30 minutes. You see that the market will start going up, up. And this is where it's been confusing us. So we thought it's going up, then we jump in. The moment it jump in, it comes by, hits the resistance over here and start dropping again. So we have to watch out for the breakout from here. And then when it's now going down, it comes and hit it again. This is where you take your trade all the way down again to where the lower low, the lowest, where it ended. So this is where you put your TP, and then your stop loss will go a little above the resistance over here, so that when it comes, it will not hit your stop loss. So you see that for the selling or bearish, your stop loss is always above the resistance at the top. But when it comes to the buying, this is where you start buying from down to the up. And then here, if you are selling and you observe there's change of character, quickly you jump in. So don't jump in when it comes here, thinking that, oh, it's going up. You will burn your fingers. As our lady Champepe have been saying. Okay, so that's about uptrend and lower low or downtrend and how to take a trade. So at this juncture, I will pause. If there is any question or there is anybody who want to also give us. Okay, so I also look at Ezekiel's Liberty when he was teaching us. He was talking about, so I want us to look at, observe this quickly on the chart. You see that the trend, there was what? A range over here. Range is only when the market is not going up or is not going down. You see that this is where the trend is going down. Here, the trend is going up. Now watch it. You see that between these two, the market is not moving up or down. Here, it's ranging. All right. Now, the moment you see that it goes above the range, that is where we say there is what? A change of character or a breakout. Then, now this one, there's retracement because this is retracement down. This is also a retracement down. But watch it over here. So what we just learned, you see that it's an uptrend. It goes back, hits the level where it got to, and then started going down. Now, we thought that this will be what? A selling one. But you see that the candle just go down, and quickly there's change of character. It goes up. Now, this is where you put, you now think of what? Buying, because the trend has changed over here, and then you target the last uptrend. So your buying can start from down here, where the last bearish candle read. Just after that, you see there's change of character with a long bullish candle. This should confirm that you are going to buy. Then you target the high of the previous high, which is over here. So to be at the safer side, you just take it up to this point and take your small profit that you want to take. But if you are using the Liberty strategy, then you can be observing where it's going up before ranging. Then here, you can decide, you see that here, the last bullish candle before the red is telling you that very soon it's going to go down or up. So to be at the safer side, you trade between this level, the support over here, and then the resistance of the previous high. So in short, this is what I've learned about market structure, and I'll leave the rest for my team members to continue. Thank you very much. Any question? If there is no question, I'll stop sharing for another member to continue. Dr.
Okay,
Lau.
thank you, my
On,
mom.
on that chart, please
Yeah.
explain that yellow candle. Why is it yellow?
No, this yellow, I think Ezekiel just used that candle to show maybe for his trading, but it's still an uptrend, not a
Okay.
downtrend candle.
Okay.
Yeah.
Okay. Thank you.
Yeah. Or Ezekiel, are you there to defend yourself? Why is it yellow?
Thank you. There's a fair value gap there. You can just see what happened there.
Okay. So since I'm not familiar with fair value gap, I'll be quiet based on that.
Mama,
Right.
also.
Okay. Thank you very
Okay,
much.
please stop share. Let me continue.
Okay.
Okay. Well done, everyone. So we'll just quickly look at Liberty strategy. Okay, so before now, I've set my strategy, but in trading view, you can actually remove, because if you're using the free version, you only have access to 2 indicators, and you can remove every indicator. So let me remove, and the London I'm removing. So Rich Vandega told us to put in 2 indicators. Yesterday, was it okay, it was Madam Faustina. I was saying, I don't know where to put my indicators because my indicators are complete. I don't have the paid version. So I said, you don't need to have the paid version. So basically what I do is any indicator I don't want to pay. For now, I still don't see the reason to pay. As time goes on, like I think Lady Shapapa says she has the paid version of TradingView. As time goes on, if I actually have the need for the paid version, as I become guru in trading, why not? I'll pay. I don't mind paying for things. Okay, so if this is your TradingView, yesterday we discussed how to get to the chart, because when you're on TradingView for the first time, you won't be seeing the chart. You first come to the upper part and come and search for the pair. You come and search for this pair. So which Van der Gaal said we should do NAS 100, and he said we should use FSCM, that they are the closest to what we have on our trade locker. So this is my NAS 100, and you recommended 2 indicators. So you go look for indicators, see my upper part here. You see indicators there. So you choose Asian Wage by Nico 943. So what you need to do is to search. I've already searched. I've already put them as my favorite. That's why you're seeing them here. So you click on the search button here and put Asian Wage by Nico 948. Then you also choose London and New York Open. So you see it LON and NY Open by John Fibonacci. So you choose both. So I'm choosing both. Once you have chosen them, they will come on your left part. You'll be seeing here on your left part. So you would now have to come and do, when you range to the right on it, you will see the first one will tell you to hide in case you don't want to see them. The second one will tell you setting. The third one will tell you to remove. So basically we're going to do settings because we want to set them. So by just choosing them, you will start seeing the first set of lines. These lines you're seeing are, this is the New York setting. This is the London setting. This is the New York setting. Why this actually is already showing me the Asian range, but I want a color I can easily identify with. So the first thing I do is to come to setting. So in setting, I'll look at input. So in input, we're going to leave it at 1 day as it is, and we are going to leave this session as it is. So this session is actually, it's not for Nigeria, but we are leaving it as it is, UTC time, we'll leave it as it is. So you come and click on show Asian session, and you also leave this input in status line, and you click OK. Then I'm going back there again because I want to do the next thing. I could actually do everything at the same time. So you go to style. So under style, you choose the color. You want the color, you want a color you can easily identify with that can be very obvious on your chart. So I'm going to choose yellow for my upper part. For the down part, I'm going to choose purple. If I do anything purple, not the editing never complete. I'm a purple girl. Purple is actually my favorite color and it's actually my brand color. So for the background, can play around with the background. If I use blue, if I use okay, I'm wondering, the background is not showing as much as I wanted, but it's still showing a little bit. So you can actually use a background you can easily see. Okay, so I'm just leaving this background as it is. So right now we'll see the Asian, you can see it forming. You can see this formation here, purple here, yellow here, purple here, yellow here, purple here. So this is a New York session. This one I actually changed the color, and what this just tells you is just to tell you when it opens, when the New York and the London open. So that's what it tells us basically. So you can actually make your choice on it doesn't really, you just use it. So what I do is, so you can see is right here under the star is showing us blue. You can actually still choose the color that you want for those as well, depending on what you think you can easily identify. What you think you can easily identify, so you can still choose the color that you can easily identify. So basically what Richie is telling us is that he's taught us about breakout and reversal, breakout and fake out method. And he also told us that we can choose the easiest one if we want, that most people go with the easiest one. I like to go with the easiest one myself. I like easy things. So if you come here, you see this time right now is the higher part is 23143, and this lower part is 23,111. So when we are talking about breakout is, for instance, I'm on the 5 minutes time frame. Breakout is, you want to watch out for the next two candles. The first candle, assuming it's breaking out to the top, if the first candle closes, then the second candle, as the second candle is opening, you can actually enter. Then even if it comes downwards, if there's a candle, if a candle opens, you want to watch it, then the next candle that opens, you enter to sell. So you are using this, what you're doing is you're just using this time frame to either buy or to sell, depends on what happened actually. So one of the things you can actually also do is you can actually just pick one of the timing and just set alert. So you can come and add alert on Asian range. So you can set an alert, and this alert, each time it gets to the time frame, it gives you an alert. Then you'll be able to know when the Asian range, when anything is happening, if there is a breakout, because you're setting that alert for breakout. So when there's a breakout, when the Asian range forms, the breakout onto the buy or the breakout onto the sell, you get this alert and you can quickly check, your chart, and you can take that decision whether you want to take a buy or a sell. So which is said we should use 1-to-4 ratio. Sometimes it uses 1-to-3, but 1-to-4 ratio. And for each pips, he said when we say 1-to-1, it means 50 pips up, 50 pips down, 1-to-1. So when we say 50 pips up, 50 pips down is, for instance, if you're taking, let's say you're starting with 23,169. If you're starting 23,169, all you need to do is to add 50. So, but if you're going to do 1-to-4, 50 times 4 will be 200. So you are going to add 200 to this. So 23,165 plus 200 will be what? It will be 23,365. Then for the stop loss, you always advise that we just do 1, ratio 1, which is 50 pips as stop loss. Now, he's also a fan of break even. The other day I was listening to the person was advising that for both of us trading gold, we should not be using break even, that before you know it, the thing will hit our break even. But which is for NAS, for this strategy, is a fan of break even. So when you are 1-to-1, once you hit 50 pips, it says break even. Even if you think you are good with your 50 pips, you can actually leave the market. But he is a fan of break even, so that you are even sure you're not losing a dime. He's a big fan of break even. So he says, once you have that 50 pips of break even, and be watching. And I also see Ezekiel. Ezekiel is a master of break even. Ezekiel is always shouting, even for our gold. Because that when the TP1 hits, for those of us that use TP1, TP2, you will hear him saying break even. So for these 50 pips that we are doing here, actually, or the 1-to-4, I think it's actually what we can even use. So that means that if we are using 1-to-4, for our 1-to-1 will be TP1, 1-to-2 will be TP2, 1-to-3 will be TP3, and 1-to-4 will just be TP4. I think that will just be it. So immediately you hit your TP1, you break even. TP2 again, you break even. TP3, you break even, and TP4, you break even. So I have not really studied the fake outs or reversal. I'm still a learner. If I had to say I don't even know small like this, I thank God. Okay, so basically that's the strategy of using the highest range here and this lower range, and watch out for breakouts for you to be able to buy, or even breakout below for you to be able to sell. That's basically what he teaches, that's what he's teaching us here, apart from the second one where you have to use the reversal. So I don't know if there is any question at this point. Do any of us have question at this point before we go to the next thing?
Yes, please.
Okay.
Okay, my question is, you mentioned breakout and fake out. What's the difference?
Okay, so for the fake outs, he spoke about reversal strategy, and fake outs, from my own understanding, is for you may probably think that, oh, this thing is going to buy. and it's actually a fake out. Maybe the markets, the people in the market, what the market manipulators are for. I'm looking for the word that they use for them now. Maybe they are just pumping in so much money at that time, and we are thinking it's going to buy. Meanwhile, it's coming to sell. So fake out just means that it's giving us. You would think we want to buy. You have taken the position, and meanwhile, it's actually coming to sell. Do you understand? So that's like a reversal, which I have not studied very well, which is why I said I've not studied that. But Ezekiel taught it in his own during the day he taught. So you can watch Ezekiel video. Ezekiel actually taught it. And Ezekiel, if you want to help with that, you can also do that before we go to the next thing.
Okay.
Or any other person that wants to help in answering that question can also help. She said, what's the difference between fake out and quick out?
Good morning, ma. I don't know. Madam, Auntie that was teaching before, if that your screen is still on, if she can share her screen, I saw a fake out there. So I will just point at, let me look at your
Okay,
screen.
Madam Faustina, right?
Yes.
Okay. Madam Faustina.
Is that your screen still on, ma? If you can share it, so I wasn't opening mine.
Madam Faustina, can you hear him?
Okay.
Madam Faustina.
I think she's here already.
Yes, I've shared it.
Okay, you have shared.
Yeah,
no, I need to
it,
stop my own. I need to stop mine. Okay. Yeah. All right. See this one, Ezekiel?
Yes, ma. Please enlarge it, ma.
This is your video she's watching. Okay, can she enlarge it? Okay.
200 points. So check for 200, you know, the difference of 200 in, you know, that is paying bigger. What you can secure in profit is always very massive, yeah. And of course, what you can secure in losses is also very massive if you don't understand, you know, what you're
stop
looking
the
at.
video from playing. Ezekiel wants to
Right,
use the chart to explain.
I would like to point out to us on this.
Four warning signs. You are a witch by blood.
This is why your birth date isn't random.
So,
that point, yeah, fine, that's fine, ma. Okay, so if you look at what happened here on the Asian range in the middle, the one in the middle, you see what happened. So the market just did a fake out here. What is it now? The red candles now, the bearish candles, yes, those as if it has started going down, and then suddenly it changes direction.
Okay.
You understand? But where we actually expecting the first one, that first Asian range. So fake out would have been like this, that the red candle did a breakout to the downside and suddenly reverses. So by the time it does a breakout, first candle, second candle, because before this candle turns to a wick, it was actually a full body candle, and then, you know, based on the momentum in the market, the emotions playing out, then it becomes that shooting star there. So if this comes out, the next one comes out, you're thinking it's going to do a breakout and continuation, like it's going to break out and continue, which is what happened actually here. This is breakout and continuation. But in the event it does kind of a breakout, like this first two candle that shows a breakout from that Asian range, and then turn back, change direction, just change direction and went bullish. that's as just those two candles that comes out as if it was going to go down before it changes direction and start going up. That gives you an idea of a fake out. You understand? It just trick you to think it's going downside and then go the actual direction it wants to go. So smart money, the big corporations likes to do that. They make you feel like this is where they are going, and then they not actually go the direction they want to go. So you watch out for those Asian range and watch when the breakout starts happening. If it is not a trick, it's just simply a kind of a trick, like what's it now? The candle breaking the previous if it is on the upside, breaking the previous higher high, as if it's going to continue going high, and before you know, it somersaults and then starts doing the downtrend. And if it is the downside, the breakout will be away from the Asian range, and then it will be lower. It will go lower than the previous lower low, as if it wants to start going low. Before you know, it turns and then start going high. So once it happens like that, it gives you an idea of a fake out. Just like the middle one did, as if it's ready to start going low after it breaks the lower low. You know, that lower low of the Asian range, if you can touch it, of the middle Asian range. So soon as he breaks it here, did as if he wants to start down, and you'll be ready like, yeah, it's going down. You jump in before you know, it changed the direction and started going up. So that's an example of a fake out. So you keep your eyes on the market and observe if it's going to be a fake out. Then you will know what to do. Yes, ma'am.
Okay.
Thank you,
So,
Zika.
I hope you
Madam
are
Khadijat. Madam
Right,
Khadijat,
stop sharing.
you are, yes, you can stop sharing. Madam Khadijat, please ask your question. Madam Khadijat, you can go ahead. Oh, were you the one that asked now?
Hello, good morning, everybody.
Yes, good morning.
Good morning, ma'am. My question, yes, I think this is your chat, right? I mean, Dr.
Yes.
Love.
Yes.
So my confusion here is from up here, I'm seeing Asian and New York range, and I'm seeing some part that is shaded, some like this one, when you're coming from up, the middle one, I'm seeing blue and yellow. So it's not, it's a kind of quite different. It's not shaded. The background is plain. I don't really understand. That's what I'm getting.
You mean this one?
Yes, that one is there. It's shaded. Between the
okay,
yellow
you mean this one? This one is not shaded.
Yes,
this one.
Yes.
No,
yes,
this one
yes,
is not Asian. This one is just telling you that this is the London time and this is the New York time. This is the one you see yellow and purple. This yellow and purple. Yellow and purple. Those are the ones that these are the Asian time. The one that I see yellow and purple, yellow and purple, yellow and purple. Okay. This one that is just like this is just telling you the start of New York time and the start of London time.
Okay. Thank you.
Okay, so Madam Comfort, you can round up the training. Madam Comfort, are you using my slide? I mean, are you using my chat? As we said yesterday.
Yes, I will be using it at, good morning, everyone. Yes, I'll be using it at a point when necessary, but let me try and quickly share something.
Okay.
Yes. Let me try and share my screen first.
Okay.
Just a second, I'm trying to. Where is my screen? Share screen. Okay.
Okay, I can see some questions in the chat box. Why Madam Comfort is trying to get up the Oh my God. Okay, Mommy Dupe is very funny. You want to Dr.
We must
Dupe,
write
I
that.
laughed.
You said you will never Forex trade. Now you are teaching how to Forex trade.
I don't give for
Congrats.
anybody. Thank you, ma. So Caroline said, how do you avoid fake out? Is it just to wait or wait for it to retest? Thank you. Madam Caroline, you don't really need to avoid fake out now. Fake out is part of the trading. It's just when how good you are. You can, if you're the fake out, sometimes before it happens, you may have even taken your TP1. So it's just for you to know that you're taking. That's why he recommended break even, because now it's very volatile. And anything can happen in smart concept. So that's why he recommended 1-to-1 that you should break even once you are achieving that boundary. That's TP1, TP2, your 50, your first 50, your second 50, break even. So you don't know if it's going to happen. So if it's going to happen, even if it takes you out as stop loss, you will know that by the time you're coming back again, because of your ratio 1-to-4, it's very possible for you to end at a profit at the end of the day. Because when we are trading, we can't avoid loss totally. Even the best traders can't afford loss totally. So sometimes it can happen. We can even have a stop loss. You can even hit our stop loss, but we go in again. And that's why we also talk about no over leveraging, so that you still have money left. It's when you over leverage that you lose all your money, you lose your account, you're not complaining. But if you're not over leveraging, you still have money in there to trade. That's what we are talking about.
So Matt, to add to that, how do you avoid fake out? Don't try to avoid it. Those are expectations. So if you are using Liberty strategy, your expectations is that fake out, and your expectation is breakout. So those are part of the things you're looking out for. Is it going to be a breakout? Then I know I will do my breakout and make my profit. Or is it going to be a fake out? Then I will know I will expect a reversal and take my profit. So there are expectations. So keep it on your mind. Don't avoid it. Just expect it.
Okay, Zike, please answer the other question. So in case of breakout like this, do you watch out for engulfing bullish candle before you take a trade if it's uptrend? Do you understand that question?
Either ways, yeah. Either uptrend or downtrend, yeah. Expect that full body candle. That, expect the full body candle, and then either a full body candle breaking out. Expect that, and let the engulfing also happen. So when the engulfing happens, you can then enter into the market. But most times, your expectation, you're actually you're watching the candles and checking out if there's somebody call it John Wick. Yeah, expecting that John Wick armor to show. And when it shows, and then you're now expecting the engulfing. You understand? So when the John Wick shows, and then the engulfing confirms that, then you're good to go. This is a breakout and continuation trade and enjoy. All right. If they want to use that to trick you into a fake out, just be open-minded and expect those two expectations. So what now? Your hammer shows, your engulfing shows, you enter for a breakout and continuations. Either ways, either it's uptrend or downtrend. Yes, ma'am.
Madam Comforter, thank you. Madam Comforter, you said.
Yes, I hope you can see my screen.
Yes, ma'am, we can see your screen.
Oh, great. Good morning, everyone. Actually, I just want to give a brief on what key levels are, because it's still speaking to all that we have been discussing so far. So I'm to talk on key levels. And what are key levels? Because key levels basically are specific points on a currency pair that has historically shown where price has either bounced off or made reversals. And then these key levels help in identifying potential support and resistance zones, and equally help to anticipate probably there's going to be a fake out or something, or failure of price movement in a particular direction or not. And hence, these key levels help in making help us making our trading decisions. And basically, and all this is actually what we have been seeing in our presentations here this morning. And there are different types of key levels that we can look at. Basically, the main ones are the support levels, the resistance levels, breakouts, and either breakdowns. Because this strategy of Rich Vendiga that we are trying to look at actually uses all this. We are talking about support levels, where price will always bounce up and start buying. These are levels that have repeatedly, that if you put an horizontal line across, you see that price always bounces upwards, and you start seeing strong buying momentum. You start seeing series of buying candles bouncing up. And this tends to repeat in those areas historically. If we look back, and we can easily anticipate that those places too will do the same thing later on when price visits such levels. Then we have the resistance levels, as I mentioned. These are levels that usually prices bounce back and start selling down. You start seeing selling momentum, series of candles selling down, both, that has repeated itself in such areas in the past. And therefore, we can also anticipate that such behavior will happen in the future. Then we have breakouts. In fact, even breakouts from a particular, maybe there is a range, and then suddenly there is a breakout either to the upside or to the downside. And in fact, this trade strategy of Rich Vendiga that's one of his main strategies that we've been discussing. He talks about the Asian range, we have seen how we can map out the Asian range, and then we are now either waiting for a breakup either to the upside or maybe a breakout to the downside. That's a very good example. So usually in ranges, when price is just going up and down in a particular area, not breaking, not either going any direction, just doing zigzag, at a certain point, a breakout occurs. So that breakout is a key level. Another way of identifying key levels is a breakdown, just whereby the price breaks out of a range and starts moving below a support line and starts going down. In fact, these are basically things that Rich Vendiga's strategy, uses. So then one thing is that we need to know how to identify key levels. How do we find them or identify them? We can use basically certain tools like Fibonacci retracement levels, whereby we can point the tool from a low and move it up, and we can see different probabilities of retracement levels, and all those retracement levels are key to knowing that those areas are key areas where retracements can happen, and then we also have what we can use as just merely drawing horizontal lines. We have horizontal lines that we can draw across certain price levels, where price tends to have behaved in a certain way. We have horizontal lines, just as that serve as points where price movement will either be bouncing back or will be bouncing upwards or falling downwards, selling and buying, we can draw the lines against certain areas where historically such touches along that line have happened before. So we can draw them across and anticipate that in future, market behavior will come and do the same thing, either selling down or buying up. Then another way to identify key levels is using round numbers. In fact, anywhere you have round numbers in the price where you have price levels, especially when you have numbers that are ending like with hundreds or 00, 100, like for example, maybe 1.1000, or maybe for example 1.2500. These numbers that end in zeros, they are round numbers, and they are basically psychological numbers. We say they are psychological because they are easy to remember, and major participants in the market tends to react to them and use them for certain decisions. So you always see price moving towards these particular numbers and behaving in a particular manner. Thereby, they are good for creating support and resistance. They serve as very good support and resistance lines. Then another way to identify key levels is the use of moving averages. For example, there are so many types of moving averages, but some of the most popular ones are, for example, the 50. We have also the 200, whereby these act as dynamic support and resistance levels. You see price reacting towards them as dynamic support and resistance levels. So that too can help to show key levels, whereby we can take market decisions as to, maybe to buy or to sell. They are very useful. Another way is also the use of volume. Volume happens in a way that, it depicts the behavior of the major participants in the market, their interest in making certain decisions now make them to react strongly in a particular way. So you now see them acting maybe towards more of putting in buying pressure or putting in more of a selling pressure. So volume too also assists in making buying or selling decisions. These also is another way of depicting key levels. Another way is the use of trend lines and trend channels. Have different types of channels, flags, and so on. In fact, Madam Faustina showed some of those things in her presentation. So using of trend lines, drawing trend lines across, either along highs and lows of price movements, can be very useful in depicting key levels, because price will always come and react along the trend lines. So we'll be able to know probably we are in a high trend, or in an uptrend or a low trend. So trend lines move along highs and lows of price movement. Then another way of identifying key levels is the use of pivot points. Pivot points, whereby you identify using the high and low of the previous day to now determine what the decisions we are going to take in the current day. Because this using the calculated use of previous high and lows, they now help in identifying potential support and resistance levels for the current day. So that's another way of identifying key levels, looking at what they were, what were the previous lows of the highs and lows of the previous day, to determine those for the present day. So these are basically what key levels help us in making our trade decisions. And there are different strategies we can use, which we have mentioned, like trading breakouts with key levels, and even the Vendegar strategy of liberty that we've discussed about. So we can trade reversals with key levels. In fact, that's part of what he has in his strategy, whereby we can trade reversals, because if market behavior depicts that, then that's why he has his different strategies that he mentioned. We have the breakout, and sometimes if the market is behaving in a particular dynamic way, then maybe the reversal strategy will be our best option. So another key takeaway that I would like us to notice that in my rounding up is that, why do key levels matter? They really matter because they help us at least to know what market behavior is doing at a particular moment, and they will help us to basically make the right trading decisions. We can easily identify our entry and exit points. We can also understand market psychology, that is the areas where major participants are showing interest in maybe buying or selling. Another important reason is that it helps us to manage risk, because support and resistance will help us to set out our appropriate stop losses in order to limit potential losses, so that we can be profitable traders. And as I've mentioned earlier, it helps in confirming. Knowing key levels helps us in confirming trends, either a breakout above the resistance line or below the support. This can confirm either a continuation of a trend, or maybe at some particular points, reversals at some points, to indicate a potential change in trend. So this is basically what I wanted to add to what all of us have been presenting today, that the importance of key levels. So I hope at least I've tried as much as possible to briefly explain what key levels are. And then one slide that I would have loved to share is that one in Rich Vendegar's training series. And I will, there's that slide where he also did a simple slide explaining key levels, which I think should be an assignment for all of us, because since the Akash app is not up, I would have presented that right now. But if we can visit that slide, it really explains these things in a very simple manner. What key levels are. He marked out everything very. So I think as an assignment, we should all get in there and look at that, his training on key levels, and look at that slide. Maybe we might even have to screenshot it as an assignment and put on our platform to show that we have actually gone to look at that training. It's not that training is just about 20 minutes or 15 minutes explaining these key levels in a very simple manner for anyone to understand. And I think we should also, in that his training series, we should go through there's a training he did, I think, to one of the last trainings in those his training series, unless maybe there's further improvement now when we get back on that app. There's that one he mentioned as bringing all together. He talked about key levels, support and resistance, his strategy. He brought everything together, how everything can fit in. We can also equally go through that training. It really explains how we can bring in all these, because all these things we have been discussing basically hinges on smart money concepts. that his short training too could also help us concerning everything we've been trying to bring up in this training. So I hope I've been able to put across as much as I could what key levels are all about, their usage and how to identify them, and how beneficial they are for us in our trading. Thank you, everyone, for listening to me.
Thank you, Mama. Thank you, Mama. Okay, so I want to we have questions as we are rounding up as Team E. All the mamas in Team E as rounding up. So you can see me in my 50, Mommy Faustina in her 60s, Mommy Comfort in her 70s. We are telling you that you can do it. This is to tell you that you can do this. Okay, so basically I want us to look at the assignments that we will now do for next week. What we'll do for next week. So we said that during the course of the week, we said we are going to do fair value gap and confluence. And I just posted something on the expansion group now, the fair value gap manual that Shaman you have posted before. Then I also want us to look at Bible candle formation. Somebody was telling me, is it Bible candle? They call that popular book. Is it Bible candle or candle? What do they call that? What's the popular book? Who knows that book? The one that is, I think, is it the Bible candle or the candle? Who knows that popular? There's a popular manual like that people read from candle. What is it called? Do any of us know?
Yes, it's candlestick. Is it candlestick manual or something? Yeah, it's
very. But they add Bible to it.
Candlestick Bible. It's
okay,
candlestick Bible.
Anybody that have candlestick Bible, so please drop it on the chat box for us. Drop it on the stand. If you have it, drop it as well. So that will be our assignment.
Trading Bible. Candlestick Trading Bible.
So anybody that have, whether it's candlestick trading Bible, whether it's candlestick Bible, will just give us. If you have it, please drop it on the expansion group. So we have those two manuals to study. The fair gap, we have it to study. Then the candlestick Bible. So on Monday we can start with the fair value gap and confluence, so that Monday people, Ezekiel team Ezekiel, you can. So, but why we are so at least we know that on Monday we are doing fair value gap and confluence. We are starting with that. So but let's over this weekend, let's read those two manuals very well. So anybody that have the candlestick Bible, I will look for it too. I think I saw it somewhere. So we are going to study those two manuals. That's our assignment for this weekend. Fair value gap that is dropped by Shaman Uriel, then candlestick Bible. Please, if you have it, please drop it for us so that we can study those two over the weekend. So I think we have done a good job today.
Candlestick right now. I'll drop it now.
Okay, you've seen it. Thank you. Okay, so do we have any parting word? Because I think we have done well today. Anybody, do you have any question or anything? If not, please, let's go. So we have to study those two manuals over the weekend. So we have that assignment. Remember my parting words, no grief for yourself. Because if you no grief for yourself, nobody fit do you, because you no go grief for anybody. You no go grief for Tinubu time. You no go grief for Buhari time. You're just no grief for yourself. Because this time, I was telling somebody yesterday that told me that, oh, love, it's so easy. She's not finding this. I said, look, we have the money in our firms, whether you want to use Traders Mastery or any of them, or the money. So now we have at least Traders Mastery. Akash has brought it to our knowledge, most more in Nigeria. The firms where we maybe those who have been trading before know about firm. Some people they may even have been trading, but they don't even use the firms. But now we see that, oh, this is possible. See money available for you to trade. The only difference, the only thing now is the knowledge to trade, so that you can get our money from those firms. So it's like you have free money. available for you. It's with the knowledge now. Trade and make this money to better your life, to do things for yourself. So no grief for yourself. Oh. We must have this knowledge so that we can trade this money. And when we are trading the money, we also put money in our own personal account. Just like you saw what Blessings told us. She traded a big account, made good money, cash out. That is where we are going to. And we are not going back. No going, like Maria said, what's it called? I said, no turning back. We are not turning back, no going back. Thank you, everybody. So we see you on Monday. Thank you, Madam Olubumi. So we see you on Monday. Bye-bye. We'll get this video out for everyone as well.
Hey, clap for us, so clap for us.
Hey, okay, please. Sorry. If you got value from these mamas, please put it on the chat box that you got value. It's value overloaded. I can even see people already clapping for you. So let's send them love. Oh, where are all those love bots? Let's send them love. Oh, guys, it's powerful session. Please, let's send them love. Send them love. We got value. It was filled with value overloaded. Value. Okay, you can see that Team E, because it was Friday is for review. I said, no, Team E mamas are ready. We're ready for you. Good job, mamas. You guys did a fantastic job. Thank you. We'll see you on Monday. Team Ezekiel, come here. Give us more value than what we did today. Bye-bye, everybody.